I've got her convinced. So she's basically saying to wait 3 months, and, see how things perform over the next 3 months, and then we'll call our advisors and, um, decide what to do then and what we're thinking. But no, I noticed that TSMC has taken a 7.11% haircut on its stock. AMD is down like 13% and all this stuff. And you know what I'm thinking essentially is big fire sale on tech companies. Everything must go. Everything must go now. Complete with voting rights and everything on its new CEO and all that stuff. The tech stock is now, everything must go. But we're waiting to see. We're waiting 3 months out to see what the market does and what things look like in about 3 months' time. So we're gonna follow, the momentum of the market and see what it does over the next 3 months before making any moves. But yeah, I've begun to think in this direction. I've been thinking, the market is now presently moving out of tech and into energy, which is great because we have energy stocks. But those were our two big bets. Way back several months ago, we bet, when we started this journey of investing in stock as opposed to bonds. I mean, at first, when with the elevated interest rates, when we came into our advisors, they were like, we're in a high interest rate environment, so we should just buy bonds, and sit and wait and see what happens. And then as they started lowering rates, the advice became to buy stocks, and then we did. We bought in, and we started riding, the stock market. The stock market, and our bets were pretty much, Exxon and, eventually Chevron later up the pike, so we had the two competitors, and their stocks, and, but we bought like Nvidia, we bought Amazon, we bought Coca-Cola too, because Warren Buffett and us like that stock, and then we bought a couple of companies. Like I've got a whole regular portfolio at this point. So Google Finance. So let me, make sure that it's on the right account too, because it's going to default to the wrong username because that's how my computer is set up right now. Yeah, see, it's wrong email. Right, so key holdings. So I've got, I advocated that we buy into Intel, which has turned into the darling of our portfolio. One of our highest performers. We bought Apple because I hate Apple, but I think they're a great investment. I bought Amazon, Chevron, Intel, Johnson and Johnson, Coca-Cola, Microsoft, and those were pretty much our big bets. But this doesn't have QQM in it now, so I have to update this chart. Yeah, well, what are you doing? Yeah, there we go. Yeah, so there. But anyways, these tech stocks are down, and everything. So I'm going to go in and add to the actual watch list to see what's going on, AMD. These are ones that we don't own, but we're interested in. I'm also just beginning to think about what's happening. So let's oh hey. So Planeteer. So those are the big ones that I'm, tracking and that I'm interested in. But also, whoops, mu. Micron technology and, anyway, so those are the ones that I'm interested in, and it looks like 3 of them are up for the whole, for the last trading session. But like over the lifespan of these companies, they're probably not doing. Moo, I would think, was probably doing well, but like Planeteer, you know, we need to see this over the range of like 5 years. I mean, yeah, it's good, but it has seen some recent pullbacks and everything. Like as of what February 13th, it began the pullback, but now it's going back up. Obviously, what's been going on with TSMC too, and its stocks over the max range. So yeah, I mean, that would be a good place to park some cash. And AMD, which has been down for the last session, and it's like what the year to date on AMD is it being down 9.7%, and for the last year, or Jesus Christ, that was a huge year for them. But AMD has been pretty cheap for the past month or so. Because it's taken a pretty significant 4.77% haircut. Over that period, even though it's been way up over the year, over the 6 month period in the year to date. So the year to date is actually down 9.7%. So I mean, this represents a move from the rest of the market, out of tech and into our energy stocks, like Chevron and Exxon have been the big gainers because of this move. But we got to start thinking logically and countercyclically. Advanced micro devices declined 7% during the past month as investors recalibrated expectations following a massive, 2025 rally. Analysts projected recovery in the next quarter, driven by a 32% year-over-year revenue growth forecast in the upcoming M1 450 AI chip launch, with segments suggest will bolster data center momentum. The bullish case for them is not just they're cheap, but it's also aggressive data center revenue targets. Management anticipates over 60% annual growth in data center revenue, fueled by the accelerating transition to AI agent computing. Analysts remain enthusiastic about the March quarter, projecting approximately $9.8 billion in revenue as EPYC server CPU market share is expected to pass 50%. The next gen MI450 AI chip launch, the upcoming MI450 series, and Helios rack scale solutions, scheduled for the second half of 2026 rollout, are viewed as major catalysts to challenge NVIDIA's dominance. High-profile partnerships with Oracle, Meta, and OpenAI are expected to scale AI revenue to tens of billions by 2027. Significant upside in analyst revisions. Despite recent volatility, the consensus remains a strong buy, with the median price target of approximately 283, implying an over 30% upside. Some analysts argue that the current 2006 forecasts are conservative, potentially leading to a bullish upgrade cycle as AI demand continues to outpace supply. The bearish case is that there's intensifying competition and market pressure. NVIDIA continues to aggressively defend its AI market share with its Blackwell architecture, while Broadcom custom silicon from hyperscalers like Google pose niche threats. Failure to flawlessly execute the Helios rack scale transition could leave the company as a marginal player in a crowded field. Macroeconomic and regulatory headwinds. Global trade policy, specifically U.S. export caps to China, remain a persistent risk for growth potential. Additionally, power availability constraints for data center have emerged as a near-term challenge that could delay large-scale infrastructure deployments. And I agree, but to me, that just makes that's actually a bull case for them, because if infrastructure is delayed, that's going to keep the price low, which means that there's more time to accumulate stock for AMD and everything for when those power constraints are resolved. And as things are going in the headwinds of the current market, you're seeing a lot of nuclear come online. And also, I've become very informed in the past cycle about, upgrades to nuclear power safety and everything. And the only thing that I really want to say about it is that I need to write a letter to the nuclear regulatory bodies advocating that we have more flex centers, So basically, because of the fact that power failure has always led to meltdowns and everything, engineers have taken one hard look at the situation and realized, we need to build a system where, it doesn't depend on power to provide cooling water to the system and only needs to depend on gravity. And so they engineered a system where if the reactor gets too hot, it will melt something, essentially, and that thing that melts will go and pour the cooling water into the reactor, which will last about, it's designed to taper itself in, so it will take about, it will provide about 72 hours of safety, for the reactors while we are able to move, generators and everything into the site from off-site and everything in order to put the reactor back up into a safe condition. And it buys us time, to do everything that's necessary to provide cooling the natural way and to repair the system if there's a break in the event of something like an earthquake or such, or, begin shutting the reactor down over the 3-day period. God forbid if worse comes to worse, or, plus, if we can get water into the area, we can always refill the tank if we have to buy more time for ourselves, so long as we can get cooling water into the system. We can totally do that and extend the life of the period of time that we've got in order to do this. So we could probably get the reactor down and shut down in that period of time and everything. And so, we've experienced a lot of upgrades. The engineers have begun thinking about edge cases. They've been thinking about Fukushima in the way that there were safety walls, but the walls were overwhelmed and everything by the tsunami, and it broke over what our conditions were and what we expected. And so they thought about how do we create fault tolerance in this system so that it's done in a way where even if there is an unexpected event where something that we don't plan happens, what do we do then? And that led to the creation of flex sites where, there's off-site places that are distant from the reactor, but these flex sites have everything they need to get the reactor into a stable state at them, and can be, brought in from out of region into the region and off into the power plant, to keep the reactor safe and everything. I mean, we've begun engineering in a lot of, just fault-tolerant nuclear safety and a lot of, really good and cool nuclear safety that's been engineered in. And if you want to know more about it, go and ask ChatGPT to take you over the NRC reports. You're going to find that the nuclear that we're dealing with today is not the nuclear of your grandfather's generation, and it's not the nuclear power of 1986 when Chernobyl went up. We've learned a lot. Anyways, I do believe that the power constraints will eventually abate. We're going to get our energy one way or another as a society.